All right, small ball players. So I'm going to put on a new small ball trade here in my account. So the reason I'm doing this is this is in the QQQs. We've had a bit of a sell-off here over the past week or two. We have a fair amount of what appears to be support in the 290 range. Now, of course, that's no guarantee that this is going to bounce up off of 290, but there's a probability, probably better than a 50% probability that that will happen. So I want to put on a trade that will largely take advantage of that. So if we come to the Analyze tab, the trade that I'm going to put on is a broken wing butterfly. And so we're going to buy 2 of the 295 puts. We're going to sell 4 of the 290 puts. And then we're going to buy 2 of the 284 puts. So we're going to do this for around a 14 to 15 cent debit, which means that our maximum risk in this trade, we're going to spend about 30 cents, 32 cents, something like that, per butterfly to get into it. So of course 32 cents, since we're dealing in times 100 is $32. And obviously, that's our 15 cent debit per butterfly times 2, and then of course times 100. So we're going to have at that point about $32 or so to buy this. We do have a max risk. So if the market were to totally tank on this and we didn't adjust it between now and the expiration in March, you would have a maximum potential loss here of the $228 basically. So we need to keep that in mind. That's our downside maximum risk. Our upside maximum risk here is about $30. So if the market were to rip up and we did not adjust this, at expiration, we could be down $30. Now, of course, our goal in this is if we need to, we will adjust this trade. But what we're hoping to have happen is what's called time decay or theta decay. So as you probably know, this blue line indicates the value of this spread at expiration. So if we didn't do anything with this trade and it expired at about $290, this trade could be worth $900. In butterflies, we are not shooting for that objective, okay? What we are shooting for is a little bit of time decay. So if I march this forward in time, if I were to get into this trade, let me lock down my price here. If I were to march forward in this trade, and let's just say we get out 2-3 weeks and we get near expiration here, we're looking for something like this to happen, where time decay will move this T0 line, this purple line, up to where we would have about 67 or so dollars in profit. Now, that's off of a 200 and some odd dollar investment. So that's a pretty darn good return right there. So that's all we're looking to have happen, is we're looking to have this line raise up over a period of time through time decay, and then we will go ahead and capture our profit on that trade. So let me move this back now to today. And this is, let me unlock our price here. So we're looking at about a 14 cent debit. I'm going to go out there and enter this trade and confirm and send. And we'll send that trade. And yep, there we go. We executed that trade. So this is our trade. We are in it for the 14 cent debit. And so we'll see how this plays out. So as volatility picks up, and our markets drop, we may, if we blow through this 285 range, we may have to do some sort of adjustment or add on to this trade. But this is a small ball trade right now in the Qs, and this expiration is the March 17th, 23 expiration.